Walk into an authorized dealer with enough cash in hand to buy the steel sports watch everyone actually wants, and there's a real chance they simply won't sell it to you. Not because it's out of stock everywhere, because the brand deliberately keeps far fewer of these specific watches in circulation than the number of people who want one. And that manufactured scarcity is precisely what turns a $15,000 watch into something reselling for $25,000 to $32,000 the moment it leaves the store. Before you buy a luxury watch, thinking of it as an investment, here's what almost nobody explains clearly. The watch itself isn't the scarce resource. Access to buying it at retail price is. And the entire genuinely real story of watches appreciating in value only applies to a tiny sliver of references, purchased through a specific, hard-to-access channel, while the overwhelming majority of luxury watches, including plenty from the exact same famous brands, behave financially like every other depreciating luxury good on earth. Before we talk numbers, we need to be honest about what determines whether a luxury watch is a genuine financial asset or simply an expensive accessory, because those two categories look identical sitting in a display case. A small number of specific references, mostly steel sports models from a handful of brands, have shown real sustained appreciation over the past decade, commonly 5 to 15% annually when purchased at retail. Everything hinges on that last phrase, purchased at retail. The moment you pay secondary market pricing instead, you've already paid the premium someone else was going to earn, and the appreciation case collapses before you've owned the watch for a single day. Outside that narrow category, the picture looks completely different. Popular, well-known references from respected brands routinely trade at 15 to 25% below retail on the resale market. They're not investments. They're beautifully made consumer goods that lose value the way a car does, just more slowly and elegantly. Here's where the range genuinely stretches from accessible to nearly unattainable, and price alone doesn't determine where a piece lands on that spectrum. At the more accessible end, a well-regarded steel sports watch from a major brand retails in the range of $10,000 to $16,000, with several specific references in that band showing the strongest track record of holding or growing value. Move toward the most exclusive tier, and pricing changes shape entirely. A now discontinued reference from one of the most prestigious independent manufacturers retailed around $35,000 before production stopped in 2021, and now regularly trades for $80,000 to $120,000 or more, some of the most dramatic appreciation anywhere in the category. But that number comes with a catch rarely mentioned alongside it. At six-figure pricing, the pool of genuine buyers narrows sharply, and finding the right one can take months, real liquidity risk hiding behind an impressive headline gain. Here's what separates this asset class from almost everything else in this series. The sticker price you see quoted publicly and the price you'd actually have to pay to acquire the piece are frequently two completely different numbers, and which one applies to you depends less on your budget than on a relationship most first-time buyers don't yet have. So you've decided you want one of the references that genuinely appreciates. Here's what stands between that decision and actually owning one on favorable terms. Retail access is the real currency here, not cash. Authorized dealers for the brands producing the most sought-after appreciating references commonly maintain wait lists stretching years for their most in-demand steel sports models, and getting allocated one at retail typically depends on purchase history and relationship with that specific dealer, not simply being able to pay the sticker price on the spot. Authenticity and completeness quietly decide a meaningful share of resale value. A genuine piece missing its original box and papers can lose 10 to 20% of its resale value compared to an identical watch with everything intact, documentation functioning almost like a certificate of ownership for the secondary market. This market has already shown it can correct sharply. A speculative run during a period of unusually loose monetary conditions pushed prices across the category to extremes, and the correction that followed saw certain references fall 25 to 35% from their peak. The pieces with genuine durable collector demand held up notably better and recovered faster than the ones that had been purely speculative, a real lesson in the difference between hype and durable value. Not every watch from a prestigious brand behaves the same way. Even within a single respected maker's catalog, some references hold roughly steady in value, while others, often the more broadly styled, less specifically collected pieces, depreciate steadily and predictably despite carrying the same famous name on the dial. Owning a genuinely valuable watch isn't a purely passive experience. Here's what it costs to actually keep one in the condition the resale market expects. Mechanical movements need periodic professional servicing to keep running accurately and to preserve the piece's mechanical integrity, a real recurring cost over any meaningful ownership period. Insurance for a piece worth tens of thousands of dollars or more is a genuine ongoing expense most casual buyers under budget for entirely, easy to overlook when the purchase itself already felt like the major financial decision. And here's the part that quietly matters most for anyone treating this as an asset rather than an accessory. Keeping the original box, papers, and any service documentation isn't optional housekeeping. It's actively preserving a meaningful share of the piece's eventual resale value, the kind of detail that costs nothing to maintain and quietly costs a great deal to lose. Here's the idea that changes how you should think about this entire category, and it has almost nothing to do with the watch itself. The reason certain references appreciate isn't really about superior engineering or a more beautiful dial. Plenty of watches that never appreciate are engineered and finished just as impressively. It's about a manufacturer deliberately producing meaningfully fewer of a specific model than sustained global demand would support, then distributing that limited supply through a retail network that rations access based on relationship rather than simply selling to whoever pays first. That structure means the appreciation isn't really being earned by the watch. It's being captured by whoever manages to buy at the artificially suppressed retail price before the piece reaches the open market, where its true, demand-driven value actually gets revealed. A buyer paying secondary market pricing isn't investing in an appreciating asset at all. They're simply paying the market rate for a watch that happens to have an artificially cheap official entry point they weren't able to access. The real skill in this category was never picking a good watch. It's securing retail access to the right one before the resale market prices in what everyone already knows it's actually worth. There are really two types of people who end up owning luxury watches, and their outcomes diverge sharply despite often buying from the exact same brands. The first is the retail access collector, someone who's built a genuine relationship with an authorized dealer over time, purchase history, patience, sometimes years of waiting, in exchange for the ability to buy specific in-demand references at official retail pricing. This buyer captures the real appreciation the category is actually known for because they're entering at the artificially low price point the whole dynamic depends on. The second is the secondary market buyer, someone purchasing the exact same watch but through resale channels because they don't have retail access, paying whatever premium the open market has already priced in. This buyer owns an identical physical object, but has already paid away the appreciation, and from this point forward, that specific watch behaves financially much more like any other depreciating luxury good. Imagine two buyers, both acquiring the identical steel sports reference in the same month. First buyer has spent 3 years building a relationship with an authorized dealer, purchasing several other pieces along the way, and gets allocated the watch at its $15,500 retail price. Within a year, that same reference is trading on the secondary market for $25,000 to $32,000. Buyer 1 now owns a piece worth meaningfully more than they paid, with genuine, real appreciation sitting on paper the moment the transaction closed. The second wants the identical watch but has no dealer relationship and isn't willing to wait years for one to develop. They buy the same reference on the secondary market instead, paying close to the current resale price of around $28,000. They now own the exact same physical watch as buyer 1, but because they entered at the market clearing price rather than the artificially suppressed retail price, there's no gap left to capture. And from here, this specific watch will move with broader market sentiment for that reference, rather than delivering the built-in appreciation buyer 1 already locked in the moment they walked out of the store. Identical watch, identical brand, completely different financial position, decided entirely by which door each buyer walked through. Owning a luxury watch as a genuine appreciating asset was never really about picking the right brand or even the right specific reference. It's about securing access to buy it at a price the manufacturer has deliberately kept below what the open market would otherwise charge, a form of access that money alone doesn't automatically buy. The accessible steel sports piece and the six-figure discontinued reference are the same underlying dynamic playing out at different scales. A bet that you can get through the door at the artificially low retail price before the secondary market reveals what collectors were always willing to pay for it. For the buyer who secures genuine retail access to the right references, a luxury watch can be one of the more tangible, wearable appreciating assets available. For the buyer who simply pays whatever the resale market is asking, it's an expensive way to discover that the appreciation everyone talks about had already been captured by someone else before the watch ever reached their wrist.